Eric Mwathe for the weekend of September 13th and September 14th, 2014. Let's take a look at how the US markets ended on Friday. Slightly down at the end of the day for the Dow, 0.36 down. The Nasdaq was down 0.53. S&P 500 was down 0.60. Gold was down 0.76. And the VIX was up almost 4%, but well off its highs. For the week, we see that the S&P 500 was down 1%. For the week, the Nasdaq was down slightly, 0.33%. And for the week, the Dow was down 0.87%. Let's take a look at the Nasdaq weekly. We can see that we continue holding above the previous weekly closing high of 4485.93. This is going to be week number 4, holding above that previous weekly closing high. That's very bullish. But now we start seeing that the Nasdaq is back below 69.1. There's some type of topside RSI resistance if you take the highs on the weekly chart on the RSI. So maybe what we are looking at here is a market making higher highs on the technicals, and yet we got relative strength declining. Also, don't forget that we are very close to a very round number, just like most of the market. So 4600, S&P 500 seems to be stalling about 2000. The Dow is stalling at about 17,000. So we have to look at those round numbers and wonder what this means. Also, we are looking at the weekly chart at a back test of this line here. Once we broke below that level, we had a drop in the Nasdaq. So here we had a drop there. And so if you draw a line from that previous drop level, if we move eventually back below this line with uniform activity, we might get some serious correction that is going to take place in the market. So we haven't seen the market really break down from current levels, but if we do on a week-to-week basis, that's going to be a major red flag. Take a look at the Dow. Actually, on the Nasdaq daily, one thing you can see here, we made lower lows on the RSI and yet prices made higher highs. That's not a good thing. So we have to watch, because this probably could have been already giving us a signal as to where the market wants to go. That negative divergence could come into play. If you take a look at the Nasdaq from an hourly chart, you can see one of the reasons why the market came off the lows is because on the RSI, on the hourly, this line held into the last hour of Friday's session, held right there, hence the bounce. So we seem to be trading in a wedge on an hourly basis. Every time we hit that level, the market pulls back. But when we come back to this level, it finds support and it bounces. So we're either going to get eventually a move out of that range or below this range, especially with that Fed meeting coming up this new week. A breakout or a breakdown could tell us where we are going to be going over the next couple of weeks. Now let's take a look at the Dow weekly. And on the Dow, we can see some red flags. Number one, we are below the previous weekly closing high of 17,100. So that could be a red flag already. So that previous weekly closing high has not held. That's bearish. You got the top lines on the weekly RSI showing resistance there. So unless the market can break out above that line with a move that brings it above this line here, if we don't break out, then more than likely we are looking at a market that has already given us a red flag signal and already told us that the intention is to go down. So we'll see what happens. There's also a break of this line here on the RSI. Now that line break previously was responsible from this break and this move lower. So we seem to be stalling below that line. Might not be a good sign. On the daily, for the Dow, notice that we made an attempt at new highs and failed. So that breakout on a daily chart failed. That's an early red flag. It also took place, the resistance that is, on the top lines of the daily RSI with a double top. So that's what we've been watching for that pullback, and also was a back test of this line here. So these two lines show resistance, and the market seems to be responding to it because now we've had a slight pullback. On Friday, we spent most of the trading session below 50 on the daily RSI level. That's why the market was down a lot, but it recaptured to close back above it. If we ever move below that 50 level on the daily, expect to see a big down move, because that's what happens when the market breaks below 50. The last time we broke below 50 was here, which is this big move on a one-day candle. There was another move below 50, for example, here, which was this big move on a one-day action. So just be careful. Anything below 50 on a daily basis could mean a big down day. Also, if you've watched my MACD videos on YouTube, this seems like uniform activity above zero and probably back below. If this is uniform activity back below zero on the MACD, and I'm using 493 on this setting, if this is uniform activity back below zero, then that calls for another pullback in the market. If we take a look at the Dow on a 30-minute chart, so Dow 30, the RSI seems to be telling us that this line here has been very instrumental. Why? Because once we broke above this line here on the way up, we've had a nice run in the market. Okay, and every time since then, if you extend the same line on the RSI, and I'm using an RSI period of 26, every time we come to the line, we bounce. Let me show you that. So every time we come to the previous breakout level there, extend the same line, every time we've been bouncing off this line. Especially if you're a day trader, this is where you want to go back long into the market. It's been holding. Double bottom there, that low, and recently, or the last hour into the last hour Friday session, it held. So if that line continues holding, then we can assume that the market continues to have the intention of moving higher. Also, you can draw that there's some type of a line here based on the ideal entry level here, which is this level. So you draw a straight line from that level there. If that holds, you expect movement higher. If it breaks, you expect movement lower, but it's holding, so we can expect on a short-term basis, hour to hour, the market seems like it wants to bounce. Let's take a look at the transports, and it's above and continues holding above the previous weekly closing high of 84.28. So that's still bullish, but we seem to be making lower lows on the weekly time frame for the Dow transports, and that could be a red flag. So that lower lows, higher prices, negative divergence is never a good thing. Let's take a look at the S&P 500 weekly. And the S&P 500, just like the Dow transports, we made a higher high, and yet the RSI is making a lower low. That's not good. But what's interesting is it held above the previous weekly closing high by 10 cents. The previous weekly closing high was at 1985.44. So that was the weekly closing high, and it closed at 1985.54. So 10 cents above that level. If it continues holding above that, that's good. But if it breaks below 1985.44, then that could be, just like the Dow, another red flag in this current market. On the daily for the S&P 500, take note of the fact that we made higher highs above 2,000, but the technicals made a lower low. You can see the highs confirmed with this congestion period there. Also, the break took place. There was a break there. Draw a straight line. You can see that it's stalling exactly where you'd expect it to stall. That's why we've been expecting a pullback. Also, take note of the fact that S&P 500, if it moves below 50, you might get a big down day. The last time the S&P 500 had a move below 50 was here, which was the reason for this big down day right there. Now let's take a look at the S&P 500 from an hourly chart. And interestingly, just like the Dow 30, this is where it's been finding support. S&P 500 has been finding support on this level right there. Just drawing that line right there is where it's been bouncing. The most recent low came from the same level there. When it held that level, that's the low there. So it's come down and is finding double bottom support, which could be the reason why the market could have a bounce hour to hour over the next day or so on the trading, as far as the trading days are concerned. But this level is holding. It's been holding for a while. Also, there's another line. Let me show you that line. If you take the lows and draw it like that, uniform activity below the line, back above it, so we can negate that, and you can see that it is finding support on what has been support on this level. You can see that once it held support here was this period, it bounced off this level. Every time it bounces off this line, it moves higher every time, even off the lows here. So again, we come here with a double bottom support. More than likely, this market is saying that the S&P 500 wants to move higher hour to hour. As a confirmation of that, if we take a look at the VIX hourly, you'll see that the VIX hourly did not close very well on Friday. Reason being that this is where the VIX has been stalling, this red line. So that red line is where the VIX has been stalling. And as you can see, on Thursday and Friday, it hit that level and pulled back. So even the hourly for the VIX is showing that there's resistance on the VIX, which is bullish for the general market, short term, hour to hour. Let's take a look at Apple. And on the daily for Apple, you'll see that last weekend we talked about possible support on that level, and we seem to have found that to be correct. It also held the 50-day, which is good. All right. What's interesting is if you take the line, this line here, these two lines, we talked about this last weekend, extend this line. The market was here. We said the market could bounce on the Apple stock, and also the lows line held. So there was a confluence of support levels there, which makes sense. And also the fact that it's been bouncing off this general 50 level on the RSI on the daily, right there. It's been bouncing off that, successfully moving higher every time. Bouncing off the 50, moving higher. Bouncing off the 50 level on the daily RSI, moving higher. Double bottom, bounce off the 50, which is where it held support there. So looks okay. Also, if you take a look at a weekly chart for Apple, you'll see that it held back above 69.10. So the momentum in the stock continues being strong. It held above also, held above the 13-week moving average, actually touched the 13-week moving average and bounced higher on the price there. So above 69.1, holding the 13-week moving average, and also the fact that the monthly RSI continues holding above 69.1. Anything above 69.1 is just telling you that it is a very, very strong market. Now I want to touch on something very interesting here. I want to show you the Dow Transports. Let's go to the Dow Transports long-term monthly chart. So this is 3 years weekly. Let me go to the long-term monthly chart. I want to show you something interesting here. And if we take a look at the MACDs, actually we take a look at the RSI on the monthly. RSI on the monthly, whenever you have that kind of a move, you have a very strong spike in a stock or a market. But what I'm trying to say here is this never is the high. That is never the high. The high comes afterwards with negative divergence. So you can see here the high 99 came here when the price made a higher high. Again, this was not the high. This was not the high. The high comes when you have negative divergence. So you can see here negative divergence like that, because we made another high. Makes sense? So you can see what I'm trying to say here is that this is not going to give us a high. And so confusion here is that we might actually have the RSI eventually pull back, make negative divergence, and go down, while the market makes a pullback and a higher high eventually before the actual sell-off begins. That's what it looks like to me, that eventually the market is going to pull back, but it's not going to be a serious pullback. It's going to come back, make new highs, with the RSI on the monthly making negative divergence. So in other words, it looks like we have a long way to go before the market crashes. If you take a look at Japan, same thing. You can see here, this was not the high. In fact, the high came with negative divergence, and then we had the high of 2007. And you can see right now, this was not the high as far as Japan is concerned, because now it looks like it wants to make a new high with negative divergence. So if that's the case, if we take a look at, for example, let's take a look at the Nasdaq, you can see what I'm saying here is that the Nasdaq is trading here. It looks to me like the price is gonna eventually pull back. RSI is gonna come below 69.1. It's gonna make negative divergence like that, but the price is gonna make a new high. You're gonna have a new high in price, lower technicals that eventually breaks the market. So that's what I'm saying. Even though here we can see that there was a sharp reversal here that was actually the high. So it depends on how you look at it. Most often than not, you need negative divergence on the monthly before you have a serious sell-off. Before I finish here, let me take a look at the Canadian market. If you take a look at the Canadian market, it closed with the RSI above 69.1, which is good. Continues holding above the previous weekly closing high, which is good. That held. And on the monthly, it continues being strong because the RSI is trading above 69.1. On the daily, you can see that shallow pullback because of a higher high in price and lower technical picture. So just like the S&P 500, it's not broken, continues holding above the 50-day moving average. So it's going to take a lot of energy to break this market, even as far as the Canadian market is concerned.